Alright, update on APE. In my previous video, I didn't really do much technical analysis because there wasn't a lot of price history for this yet. But there's some things happening on the smaller time frames that I feel like I should talk about. Now again, this doesn't have a whole lot of price history, so a lot of this could be nullified. But the first thing I'm seeing is a zone of resistance right about here. And this is set from these highs right here and here, as well as this zone of consolidation here with a little bit of a fake out to the upside. You see that we actually tried to form a cup and handle formation here with even a little bit of a breakout before just getting rejected at the top of this box. As of right now, we're still setting higher lows and higher highs. So technically speaking, this is still in an uptrend until we start setting lower lows as well as lower highs. Now we can actually take a fib retracement from this high to this low. Right now you can see that we are battling the golden pocket between the 618 and the 65 level on the Fibonacci retracement. In my opinion, if this doesn't hold, we're probably going to start setting lower lows. You can see that we actually might be forming a head and shoulders pattern here on the hourly chart. In my opinion, these aren't the most reliable formations because generally, at least within crypto, they end up forming different patterns as the price plays out. But it's definitely a good idea to keep them in mind when we see them. So what we can do is we can take a price target from this head to this neckline. We can extrapolate the price data downwards. And you can actually see that this is pointing right at the 382 level. So if we do manage to find ourselves at the 382 level at 1175, we could probably see a retest of this neckline before trending lower, which would then be setting lower lows and lower highs, ultimately telling us that this uptrend is done, at least on these shorter time frames. You can also see that ever since the coin was launched, the volume has dropped dramatically. If we turn on the Ichimoku cloud and the EMA ribbon, you can actually see that we have broken the cloud bearish. You can also see that the EMA ribbon is turned red and the spread is widening. And you can also see that we have broken the 200 EMA, although not by a lot yet, but we have broken it to the downside. So this is really important to keep in mind. If this Ichimoku cloud turns red, we see a bounce and then a strong rejection off the Ichimoku cloud. This could mean that we're entering a new downtrend. So at that point, this low right here at around $9.7 has to hold. If we go much below that, we'll probably start seeing prices around this mark right here, around $7.3. In my opinion, this is really probably about it. If we go much lower than this, it's unknown how low we'll go because there is no price history for this. If we go to the daily chart, we can actually do some candlestick analysis. This candle right here looks like a shooting star in my opinion. I generally like to see these with a little bit taller wicks as well as a little bit more volume. As the taller the wick and the more volume we have, the higher the sell pressure. And these actually form at the bottom of downtrends just in the opposite direction. It's called a hammer formation, which indicate a reversal to the upside. So we could have to wait a few days to see if this is valid, but so far we've already gotten a red candle to the downside that's closed lower than this. So to summarize real quick, if we want this uptrend to stay at play, we need to continue to set higher lows as well as higher highs. If we don't, we'll probably start entering a downtrend, and at that point our last level of support is going to be right around $9.7. A quick note on the circulating supply, it hasn't changed since my previous video, which is a good sign, at least in the short term. So the more money that flows into this, we could actually see a spike. So if you found this video useful, go ahead and hit the subscribe button. I try to at least post content daily, it depends on my scheduling, but this isn't financial advice, and I'll see you in the next one.